Forget China. The race for the fastest growing economy is actually between India and Indonesia. Now, we all know China's been on the rise for years, but it seems like things might be different now. So let's compare the economic powerhouses of India and Indonesia to see who's going to be taking the lead.
Where is India in your book? I mean, you talk China, United States, and there is a huge country with tremendous wealth. Where is India?
India is the country, from all of the statistics using 10-year growth rates and also just what's apparent, India will have probably the greatest growth rate, the fastest growth rate economically, have the greatest transformation of any country. And I would say, like, if I was going to paint the world.
Okay, India and Indonesia are both seen as economies with promising growth opportunities among the world's largest economies. With a combined population of 1.7 billion, they are projected by the IMF to be the fastest growing economies among the top 20 in the next 5 years. You see, both countries are navigating challenges such as deglobalization, geopolitical tensions, automation, and shifts in energy dynamics while pursuing strategies for economic growth. Their success is important not only for their citizens and investors, but also for other nations looking for reliable development paths in the coming years. Because you see, for decades, developing countries have been following this one trusted formula to get rich. Move workers from the farm to more productive manufacturing gigs in cities. Then you have these workers making products for the sake of export. Once that's done, it's time for you to count the dollar bills. It worked out pretty well with South Korea and Taiwan. In the past, China successfully lifted 800 million people out of poverty using this particular economic scheme. But this approach just doesn't seem to work today. First of all, while many countries now have unpredictable democratic governments, South Korea and Taiwan started their industrialization journey with more strict authoritarian regimes. And secondly, protectionist policies from many nations now pose a threat to export-led growth, and the increasing use of robots in factories has changed the landscape of manufacturing forever. But does this mean that both India and Indonesia can do the unthinkable? At first glance, India and Indonesia share several similarities. Both countries are led by popular leaders, Narendra Modi in India and Joko Widodo, known as Jokowi in Indonesia, who rose from local politics. They led large populations, India with 1.4 billion people and Indonesia with 280 million, spread across diverse ethnicities and languages. Both nations have experienced rapid economic growth over the past decade, with India's GDP expanding by 71% and Indonesia's by 52%. Not to mention, the services sectors dominate their economies, with trading accounting for about 40% of GDP, and foreign direct investment at 1.5% of GDP annually. But apart from that, a big portion of their workforce operates in the informal sector, 90% in India and 60% in Indonesia. And that's a big problem, especially in terms of tax collection. You see, both India and Indonesia are investing heavily in infrastructure development. Since Jokowi took office, Indonesia has built 18 ports, 21 airports, and 1,700 kilometers of toll roads, while India is adding 10,000 kilometers of highways each year. Despite these advancements, there is still a lot of room for economic growth. Indonesia's gross national income per person is around $4,200, while India's is approximately half that, placing them both in the lower middle income category. But that is where the similarities end. To understand each country's strengths, we look at 4 key areas: the main export sector, industrial policies, geopolitical stance, and approach to pleasing voters. In India, technology services lead the export sector, with the capacity to produce around 500,000 new engineers annually. India contributed to 15% of global IT services spending in 2021. Indonesia's strength lies in commodities, particularly nickel, which is high in demand globally due to the shift towards renewable energy. By 2030, Indonesia is set to become the world's 4th largest producer of these green commodities crucial for batteries and energy grids. The fact is, these industries create quite a lot of foreign exchange for the two nations. In 2021, technology services represented approximately 17% of India's total exports in terms of value, while commodities, excluding fuel, made up about 22% of Indonesia's exports. Despite their huge contributions to exports, these sectors create relatively few jobs. For example, India's IT industry, although quite large, only employs 5 million workers. 5 million workers in a country where the population is reaching 1.5 billion isn't substantial at all. Both India and Indonesia aim to boost their private sectors through industrial policies. India seems to have a much better starting point though. For example, the MSCI India Index, covering about 85% of the market, is valued at around $830 billion, which is about 24% of India's GDP. While the Indonesia Index is valued at just $123 billion, approximately 10% of its GDP. India also has over 110 unicorn companies, ranking third after the United States and China. Oh, and for those of you who don't know, a unicorn is a startup company with more than $1 billion. These companies are privately owned and are not traded on the stock market. But Indonesia is home to only under a dozen unicorn companies. Now, Prime Minister Modi is betting on $30 billion worth of production-linked incentives to stimulate investment in 14 key industries, including semiconductors. On top of that, his commitment to achieving net zero greenhouse gas emissions by 2070 involves initiatives like building solar farms and producing batteries. The point of this move isn't just to promote environmental sustainability, but also to create jobs and reduce the cost of power. It's expected that India's energy import bill will decrease from 4% of GDP in 2021 to 2.5% by 2032. Indonesia's main industrial policy, calling downstreaming, focuses on natural resources. It takes a strict approach, aiming to encourage multinational companies to set up refineries locally by banning exports of a few certain raw materials. For example, in 2014, exports of raw nickel were prohibited, leading to a significant increase in the number of nickel smelters from just 2 before the ban to 13 in 2020. By July 2023, Indonesia had 43 nickel smelters in operation, with an additional 28 under construction and 24 in the planning stage. There are plans to expand this approach, including a soon-to-be implemented ban on bauxite exports. Indonesia also plans to move up the value chain by producing electric car batteries with a total capacity of 140 gigawatts by 2030, which is the same as global production in 2020. In fact, recently, Hyundai, a major car manufacturer, began producing EVs in Indonesia, which shows a shift towards higher value-added manufacturing in the country. But enough about their industries. Let's go over how their financial markets hold up. Investors are keeping a close eye on the stock market performances of India and Indonesia. You know why? Because over the past 3 years, Indian stocks have seen an annualized return of 6.1%, which is slightly behind Indonesia's market, which has achieved a 6.3% return. In the bond market, August of 2023 saw a major influx of $1.4 billion into Indonesian bonds, marking the first net addition in 6 months. Meanwhile, India experienced a gain in the demand of the rupee. In terms of currency performance, the Indian rupee has performed well compared to the Indonesian rupiah in the first half of 2023. Still, experts predict a potential shift in the future. Now, let's talk about how the two are going about their foreign policies. As tensions rise between the United Nations and China, both countries adopt different geopolitical stances, which will have lasting effects on foreign investments and trade. Indonesia, following its non-alignment policy, aims to balance relations between China and the West. In 2021, Indonesia launched a sovereign wealth fund, which is expected to receive up to $3 billion in investment from China, one of its major sources of foreign direct investment. According to Indonesia's minister, Nadiem Makarim, the Indonesian government emphasizes prioritizing its own interests. Meanwhile, under Prime Minister Modi, India is more careful about its relations with China. Following deadly border clashes, India joined the Quad, a strategic alliance with the United States, Australia, and Japan. Modi's industrial strategy also focuses on attracting Western companies diversifying away from China, such as Foxconn, a Taiwanese manufacturer of iPhones that recently received approval to build a $1 billion facility in Karnataka state. With that out of the way, it's only fair to see how the two governments hold up against each other. In the aspect of keeping the voters happy, both governments are aiming for economic growth, yet they face challenges in generating enough formal jobs like those seen in China and East Asian countries. Rajaram Rajan, former governor of the Indian Central Bank, says that the issue of youth unemployment in India is a massive problem, given the country's demographic advantage that's being wasted. To fix these issues, both countries are working on better redistribution strategies, often using digital technology to improve welfare programs. Indonesia has a significant cash transfer scheme, while India has introduced the India Stack, a set of digital platforms sponsored by the state, connecting citizens to various services like payments, taxes, and bank accounts. In the 2022 fiscal year, India allocated $76.5 billion, equivalent to over 2% of its GDP through direct benefit transfers, benefiting approximately 900 million people. But there are many political differences between the two countries. In Indonesia, President Jokowi leads a broad coalition consisting of former rivals and the majority of parliamentary parties, His inclusive approach has helped manage Islamist political factions. Although Jokowi is ineligible for re-election, he plans to continue with his inclusive approach. Prime Minister Modi of India has adopted a different strategy though, utilizing anti-Muslim rhetoric to get support. This has led to a surge in Hindu nationalism. The upcoming elections are expected to witness heightened religious tensions and a further decline in liberal norms. Recently, Rahul Gandhi, leader of the main opposition party, faced disqualification from parliament following a court case which could have drastic economic implications in the future. But keeping that aside, which of the two countries will grow the fastest? Well, as we talked about before, India and Indonesia share common challenges such as issues with cronyism. In Indonesia, President Jokowi is surrounded by influential tycoons, while in India, the Adani Group, a powerful conglomerate, has faced national scrutiny for being a bit too influential. Despite these similarities, India, with its more developed private sector and capital markets, is expected to sustain faster growth. But the risk lies in its political landscape. Both countries rely on a model of development where a specific sector drives growth, with wealth either trickling down through the informal economy or via welfare schemes. The ability of the political system to handle resulting social pressures is crucial. In Indonesia, the government shapes and pacifies public opinion, while in India, it sometimes stirs and directs public anger. India might have a small advantage for now because of its strong private sector, but don't underestimate Indonesia's potential in the long run. The real winner will depend on how well each country deals with its own issues and makes the most of its opportunities on the world stage. So only time will tell about who will take the lead. And that's it for today. Let us know if you're Team India or Indonesia in the comments down below. And until then, make sure to click on this next video to find out more about the world economy.